Hi, everybody. I'm Ryan Davies, your host for today's edition. We're with the TBR Private Equity Edition, and I'm excited to interview Joe Gracci. And our topic today is building with an exit in mind. So, how to plan for a successful tech exit. Joe, thank you so much for joining me today. Really excited to dive in and pick your brain on this one.
Yeah, thank you, Ryan. Appreciate the invitation on the podcast, and eager to share some experiences with other business owners and founders.
Excellent. Joe has an incredible wealth of experience in this area. It's so exciting. He has built, a number of $100 million plus businesses, and he's going to do it again. And we know that. He's all about growth from the personal and professional side of things. And you mentioned one of the key things is for you being a perennial student of business. And I think that's a lot of what we offer here with TBR is always having that learning side of things in mind. So we'll dive into kind of what that means to you in a bit here. But, your specialty, again, is around building businesses around emerging technologies, market shifts, the greenfield areas where really strong partner ecosystems are key to success. And, those spaces that are a little less traveled, where value can be unlocked through a lot of that skillful navigation and leadership side of things. So with that, I'd love to kind of kick off a bit, what being that perennial student of business means to you.
Yeah, it is a constant learning and evolving yourself as a professional, as a business owner, and that comes from many different inputs. So we're always learning through our own experiences, but also through other entrepreneurs' experiences. So I'm part of a CEO peer group, CEO Global Network. I've been a part of that for 10 years. That is my classroom. And I go every month, and I'm putting out challenges, but I'm also contributing to other CEO challenges, and so there's a lot of learning that happens through that. But it's really about your own personal growth and where you want to be as a professional. And so there's the great thing about business is that I haven't stopped learning since business school. You graduate from business school and you think, okay, great, check that off. And no, it doesn't stop there. It actually starts there. And so I've had some great opportunities in my career to learn in different circles, different ecosystems, different industries, different technologies, and so that's what drives me. It just when the learning stops, I get bored and then need to find something else, and so for me, learning the fastest path of the fastest pace of growth is through learning.
Amazing. And, you mentioned, you like to, some of those, you like that high, the high and fast learning curves and those types of technologies and that sort of those areas. So I know before we started here, we had a little bit of a discussion about some of the areas you've touched on, but maybe for our listeners, you can kind of give a bit of a background on the many different areas and spaces that you've played in those emerging markets and technologies.
Yeah, so I spent a number of years in financial technology, in networking technology, wireless mobility. I spent almost 10 years building cybersecurity business, AI, e-commerce, and so I've and in all of those areas, I was always new to the area in terms of running or building or starting something new. So I always went into those ecosystems and those technologies not knowing anything about the technology or the ecosystem, and then quickly ramping up and really understanding what moves and what shifts are happening in those areas.
Perfect. And we talked about, again, the topic here is building with an exit in mind and how to plan for that exit. But you mentioned, again, when we were kind of before this, when we started, that one of the things I really loved here was you have to build your business with that in mind, but you really have to start with that foundation, right? So for our listeners, and everybody wants to have that successful exit, and of course everyone's looking to create the next big thing or be a part of the next big thing. but where does that come from? What have you learned over time to be able to build that foundation? And where does one kind of start with that exit in mind?
Yeah, so as far as the foundation is concerned, obviously, like looking at where are the shifts and trends in the industry, where are there roads less traveled that you could really carve out a business and a niche and whatnot. But once you've done that, like that is, so we put a lot of planning and energy around that part of it, and we say, and we get all excited. Great, let's start a business or buy a business or evolve a business or move a business into those spaces. But then we don't do enough planning early on to understand what are, number one, what are the options going to be once we've built that business to a certain point, but how is enterprise value impacted by the decisions that we make along the way? And that's the critical piece around exit planning. It's not so much, hey, I need to do exit planning because in a year or two I'm planning to sell my business. It's not entirely about that. It's about knowing what is going to drive your enterprise value and your valuation over time. And that is the one metric that business owners and founders really need to, make sure that they're continuing to focus on. Yes, we have our metrics on revenue and profitability and all that. And that directly or indirectly drives enterprise value, but there's other pieces that drive enterprise value that you need to plan for. And one of them is market attractiveness. So a lot of small business owners that are in the, say, sub 5 million revenue, 1 million to 2 million EBITDA range, they really do have, it is a tough market to exit. And so businesses have suddenly liquidity issues because they say they're ready, and then suddenly they're not getting the offers that they're looking for. Someone's valuing their business differently than they thought they would value their business. So doing that planning early on at least allows you to identify and figure out, okay, how is this going to impact my decisions moving forward in terms of, strategy and resource allocation, market spaces that we touch, all the levers for your business. And so that could really be helpful, regardless of when you want to sell or what that time frame is. It doesn't matter. You have to understand how your decisions are going to impact enterprise value for that eventual sale, as well as your market attractiveness at that time when you're ready. So you obviously want to be a very coveted target, and that's our goal as business owners, is to have a lot of people interested when we're ready to make that exit, and that's all part of the planning process.
So, yeah, and I know you love, working as a problem solver and a collaborator, and especially as a coach and mentor to, a lot of people who are probably listening here and that are interested in exactly this. How does one get away from getting too excited about this too early? Because you must see that a lot. Like you just said, there's a lot of planning and a lot of work that needs to go into it, a lot of evaluation and things from that perspective. But how do you help people from that perspective, where they're, maybe they haven't even had that first tinge of success yet, but they've had that first taste of what success might look like, and already they're starting with here's my number and here's my timeline, here's how I'm going to do it, right? How do you kind of prevent that cart before the horse situation that might happen all too often?
Yeah, it's just embedding some of the key components of exit planning into your strategic planning process and within your organizational structure. So I'll take one example: owner dependency. It is a killer as far as market attractiveness, valuation, and ability to exit successfully. So if you're running a business where you are 100% relied upon to make every decision, to make things happen, to solve every problem, to as far as the primary relationship for your top customers and your top suppliers, and they rely on you, that relationship, to move forward, those can be very, very negative features of your business. And so depending on who, again, it depends on who it is or what group it is that you think your business will be attractive to. One thing that is not going to be attractive is a business that relies completely on you for its day-to-day operation and running and for its success. So part of the building process, so as you're building, you keep that in the back of your mind. You say, okay, well, as I'm building, these are some of the ways and decisions I need to make in order to create greater autonomy and independence inside my organization. Now, obviously, you can't do that if you have a staff of 5 people, right? But you can start doing that when you're north of 20, 30, 40 people. You can certainly start building that piece into your planning process.
So, that's a great, great call out from that perspective. Is that something you would recommend, or when you're coaching and you're mentoring, that you do as well? Do you have milestones in mind? Do you have ideas, or again, like with this roadmap for this exit strategy that you put together, how is it very fluid from, again, from company to company from that you're working with, or do you tend to have a fairly structured, hey, look, you need to have these check boxes in part of your planning process?
Yeah, and it's the latter. There are some best practices. We're not reinventing the wheel here. There's certain pieces and check boxes that have to be in place at certain points in time. And so you can plan for that and put a structured process in place. So, and that's what I do. That's what I help. I love helping other entrepreneurs and business owners with that, because it encompasses and touches every part of your business, right? Not just business operations, and not just sales and marketing, and not just HR and contracts and legal and whatnot. It touches, like, owner dependency touches every part of the business, because owners touch every part of the business, right? So you have to tackle it from end to end, the full spectrum of the operation.
And again, you've done this multiple times before, and everyone remembers their first, I believe, is the saying it's supposed to be. Wherever it comes from. But what have you learned along the way from that first time you were going through this exit to, now you've kind of become a seasoned pro with it, and being able to help others? I think it's always important for people to understand, it's the first one's never perfect. It doesn't need to be. But what have you what's that evolution look like for you along the way?
Yeah, I mean, it started out with just, like every entrepreneur, just building a great business, building a valuable business, focusing on the things that you truly enjoy and that move the needle for you. So for me, it was around leadership and culture building, and seeing my team learn and grow through the process, right? So exits weren't at the forefront of what I was doing, but owner dependency was at the forefront, because and it takes time to do this. It's not a flip of a switch. It's not the easiest way to or the simplest comment or feedback I get around owner dependency is around, well, I'll just hire a general manager and away we go. Then I can sort of pull myself away from the operations of the business. Well, now you're creating dependent. If you haven't changed certain fundamentals within your business in terms of how it operates, then you've just moved that that dependency to a different position, maybe not yourself, right? Which creates other risks for you. So the key thing is really around tackling and looking at every part of the business and creating a fully autonomous organization. And the true test is being able to, leave at peak periods and not get called into 911 situations where you have teams that are completely capable of doing what they're doing. And again, that's part of leadership and culture building and creating, freedom and autonomy within your organization. So for myself, the big part of it was around, what culture do I want to build? And then the downstream impact to that was, well, they didn't need me anymore for day-to-day operations or for emergency situations or anything like that. So the true test is if you could leave at a peak period and not get those, bombarded, with calls. Now, obviously, you are going to get pulled into there's certain things that a business owner has to get pulled into. I completely understand that it's not completely hands off, but there's certain tests that you could start building into your organization safely and effectively, so that the house doesn't burn down while you're trying to, while you're doing these tests. But that's the first test is being able to, leave your business for a period of time, whether it's a vacation or something at a peak time, and see how the organization responds. The other test is basically at that point where if you are putting your business up for sale and a buyer comes along and says, well, looks like a great smooth operation, we're not going to need you. That is the ultimate test that you've built with that in mind.
So that really comes down to building that really strong transition plan and structuring for it properly. And, maybe you can touch on key members of the advisory team. Like you mentioned, you're not at 5 people, but you're going to 20. And then I'm sure there's, between legal and making sure you've got all of the proper value drivers, whether that's your IP or your brand or whatever the value of your business provides, making sure that that's all solidified. What are those, do you have sort of a list of, or a few things you'd like to say, hey, these are really important that people tend to miss when we're talking about that transition plan, or those key drivers that need to be part of your advisory board, or part of that, those pieces that need to be locked down?
Yeah, I mean, having an advisory board that has with business owners that have experience with exits or with M&A advisors as well is very helpful, or exit planning advisors. They could be very helpful even during your business building decision making process. So keep in mind when you're building a business, you certainly want diversity of views and a different lens to contribute and for you to think things through, because we do have our blind spots as business owners. So having a strong advisory board is really important for that. I think one one is we have our own theories as business owners based on our experience. We say, well, this is the group of people I'll end up exiting to, or this is what the path looks like, without really doing a lot of that real sort of research around it. And so sometimes that gets missed. I think the day-to-day running of your business is obviously you're good at it. You're doing all the hygiene factors. You're growing the top line. You're growing the bottom line. But a lot of things or one of the things that sort of do get missed is almost, and it is an exercise, but almost putting together a virtual data room, right? Like testing, that data room in terms of, okay, well, I'm going to get asked for, 17, types of documents and process flows and reports. And so a lot of times just being able to create and present the right data to your buyers instills confidence and shows that you're organized and you have a well-tuned operation. I've seen business owners stumble through it, and then they're trying to build things on the fly. They don't have process documents. They don't have the right financial reporting in place that segments their business the way buyers may want to see it segmented. And so a lot of those, a data room due diligence test is an ultimate test. Now it's time consuming, it's painful. And so most business owners won't have time in their day-to-day operation to do something like that. But I think doing some of those exercises through your advisory board can be very helpful, right? At least just to ask those questions at every board meeting. Do you have this in place? Do you have that in place? What does this look like? What does your financial systems look like? And so if you can at least get that coaching or that I would say blind spot identification on a regular basis, then eventually you're going to have everything that you need to run a successful exit process.
And when we're looking at an exit process, I mean, beyond money, what other priorities and preferences would you say that people should be taking into account? And whether that's, do I want to roll here post sale and for how long or things like that? But what else is there that you would say, past the dollars and cents that should be a big consideration factor in an exit strategy?
Yeah, and so I talked to so many CEOs around this that have sold their businesses or considering selling their business, and one of the things that does get underappreciated by CEOs or of CEOs is how much they care about their teams, and how their teams will be impacted by a sale or an exit, right? And so, and as well as how their teams will be treated. So past the dollars and cents and past the owner's involvement post sale, the third biggest piece is how is my team going to fare around a deal like this? And so I see a lot of empathy around that, certainly.
And how about like retaining like a minority equity stake? Like we're talking, you want to stick around from that perspective. What are some of the pros and cons and things that you've noticed from that perspective, and in terms of considering that as part of this?
Yeah, sometimes it comes down to emotions and psychology of the business owner. So the fear of, I exited, now I'm going to have regrets because I could see the upside, and maybe I sold too early, or maybe I could have waited for a different type of buyer or whatnot. So I think there's two sides to it. I mean, if you're relying on that exit to say retire, and then it makes perfect sense to do a full exit. If you see a role that you'd like to play going forward, you might want to roll in 25, 30% back into the business, something that is not going to, like a number that is not going to be I would say detrimental or hurt you in the long run if things don't play out the way you'd like them to play out. So I think that's always a good aspect to consider is rolling in some money into the and it just depends on how you feel about things and the opportunities you see going forward and what your plans are post sale. Like some business owners will say, well, I'm actually going to go out and start something else, or I'm going to buy another business. And so that's fine. You have to take all that into consideration.
Yeah, I was going to say, I think that's probably one of the maybe more overlooked is the what am I going to do post exit? Why am I exiting in the first place? Kind of a strategy. So is that an exercise that you definitely work through with people as well? And what sort of elements are involved in that? Is it more than just like you said, are you retiring? Is it for family wealth, or is it what's the next plan, and how do you help with that shaping?
Yeah, so I think that's an important part of the process, because if it's a type of business where you spent the last 20 years and it's just become part of your fabric, your identity, your DNA, there's a lot of unpacking and unwinding to do there. So helping business owners understand what are the options post sale. Post sale doesn't mean a complete exit out of business entirely. You could have a valuable role on boards. You could help fund other startups or other businesses and be more of an investor. There's a lot of, you can get into philanthropy. There's so many interesting and cool things that really do open up for business owners once they've cleared their head about, okay, I've accepted that I am going to exit, and I'm not going, my full-time job isn't going to be with XYZ company, but I'm still going to stay in business. I want to stay in business, but what does that look like? And so doing a little bit of research and working with people to understand what those options are would be really a really good exercise to go through.
Sitting on the other side of the table with Joe Ventures there. So what do you look for? Like when you're sitting and people are saying, Joe, I got this. I'm looking to exit. I want to pitch you. I got this, whatever it is, and you're saying, all right, this is where I can tell somebody is ready for it. What does that look like from the other side of the table for you from that perspective?
Like from the buyer side?
Yeah, yeah.
Yeah, it's interesting. So from the buyer side, it's really, just around, what is the risk profile look like for for making an investment, or in a business. How can you contribute your expertise to help the business and help the business grow. So I always look for those factors. I look at leadership skills, which sometimes is overlooked. We sort of a lot of investors, look at the numbers and the trajectory and the hard data, but it's really important to look at what is the leadership style, what is the culture that a business owner has built, and taking a deep dive into that. I think those are leading indicators in terms of, okay, now the numbers do support that. So I think it's really important to look at some of those factors for sure.
And I guess, it might have been the first thing we could have asked, and it could be the last thing we would have asked, but like, when does somebody start this process? When does somebody start planning for the exit strategy portion of it? Like, is it, when you're already brainstorming the idea of the business and starting to figure out when valuation numbers are starting to come into fruition, or is it when you're starting to close that valuation gap and you're going, okay, now it's getting closer to where I want it to be? What's kind of the timeline, would you say? Is there an optimal time?
Looking back at the businesses that I've run, I think I would have started that planning process a lot earlier, and not necessarily tied to an event or when I think I would be ready to sell my business. It would be embedded in the strategic planning process. Okay, so as business owners, we would have our annual offsite or our quarterly business planning meetings with our executive team, or some close team members, or with boards, or whatever the case may be. I think it's important to take those components around exit planning and embed it into the business strategy. Okay, so that it could heavily influence the decisions you make and the investments you make within the business. So I think starting as early as possible is important. For a business owner who's never sold their business before, there's just some things you need to know, just like any other discipline or aspect of business, that you should just get educated about and get trained, learn a little bit more about that, whether it's through literature, whether it's through having advisors you're working with, or a coach. But I think that's a really important part of the process, because, again, as first-time business owners, you have your blind spots. And so it could really open up different ways to accelerate enterprise value in your business. Again, you haven't made a decision to sell or timing around sale, but just introducing the concept of exit planning and the different components that are critical, that drive that would be helpful to know today. I think you should get to know today before it's too late.
And then so now we're going to swing right to the opposite end of it here to kind of close us off. We've talked about, it's never too early to start looking at it. when is it like on the other end where you're like, this is it, this is the tipping point, it's happened? Because you've seen it before where a market becomes oversaturated, or there's a competitor that comes in, or there's something where valuation starts to drop. Is there a time, or any, I know that's a really tough question to kind of pose there, but where that tipping point is sort of like, it's now or never, I've got my ducks in a row? How do you make that decision? I think that's one a lot of people struggle with.
Yeah, I think the best time is when everything is going well. Okay, because I've seen it time and again where business owners start thinking about a sale when in the middle of a recession, on a downswing, in the middle of a pandemic, or when unfortunately there's been a, maybe a health issue in the family, or priority, family priorities, or something happened, like an event happened, whatever that is. And so that becomes the trigger to start thinking about it, but it's too late. It's too late because you haven't worked on your attractiveness. You haven't worked on what are some of the drivers of enterprise value that you could have been working on. You could have started working on, building owner independence. So, and here's the other part to it. The other part is the buyer needs to see upside in your business. So when things are going well and you can show that trajectory, it gives them confidence. It reduces the perceived risk of making that investment and buying your business. So that's really important. And it's really hard for entrepreneurs and business owners to accept that, because it's like, well, why would I want to sell when there's more money on the table, when things are going well? Well, guess what? You'll attract a higher multiple because things are going well. You've reduced the risk profile, so you'll actually have more buyers interested in your business. So all of those things are, you might get more just because it's everything is going well. Then even if your business doubled and you're in the middle of a recession and you're trying to sell your business even after it's doubled, the multiple may have dropped in half. So for example, the SaaS Capital Index, the indicator for multiples for SaaS based companies, at its peak, I think last year it was at 18 or 20 times revenue. It's now dropped to the average of 7.1 times revenue. Same business,
Yeah.
but valuation's down by 60, well in the neighborhood of 60%. So even if you doubled your business, it wouldn't have moved the needle or changed the valuation of your business. And on top of that, you might not have as many buyers interested in your business too. So there's a lot of factors, but I think the single biggest one is sell when everything is going well and you're mentally and psychologically ready to accept that and learn what else is on the horizon for you.
I think that's perfect. That's a perfect place to exit here as well, I think, with that with that great piece of sage advice. So Joe, unless you've got anything more that you'd like to add, something we haven't touched on, I think this was just a fantastic, half hour. We went even over our half hour that we discussed here, but there was just so much valuable information. Joe, is there anything else that comes to mind? Anything we didn't hit on here? I think we can make like 8 more podcasts out of some of these.
Yeah, I think we can do this again and do some deep dives. I appreciate the time, Ryan, and I wish all business owners success in their business and looking for that right exit for them. But thank you so much. Appreciate your time.
Thank you so much. I want to thank Joe for this amazing podcast, Building with an Exit in Mind, How to Plan for a Successful Tech Exit. Also, I want to thank our listeners. We can't do what we do without you. So until next time, with another amazing TBR episode, I'm your host, Ryan Davies. Thanks so much for listening. Take care, everybody.